delighted to welcome you to FHS podcast. Today with me is Bruno Trenchard, Senior Director and Head of Feasibility and Churn at Accor, responsible for Middle East, Africa and Turkey. Welcome, Bruno. Lovely to have you with us today.
Thanks for having me today.
Wonderful. It must be super busy for you guys now. You know, we are in October, I'd imagine. Looking forward to the event as well.
Yes, very much looking forward to the event. And as usual, October and November are the busiest times of the year for us. But we'll make time for you at FHS, of course.
Thank you. Thank you so much. Well, I want to start maybe a little bit with the beginnings. And if you can tell us a little bit more about your story and what drew you to hospitality in the first place? How did you end up with Accor as well eventually? What drew you to Accor lastly?
I've always been interested in international mobility and moving from countries to another in my professional life. So the hospitality and tourism industries, they were a very natural choice in that sense because of all the opportunities they offer from that perspective. I did a few operational roles here and there in different countries and moved to Dubai after graduation. I worked as a consultant doing hotel advisory and hotel valuations in the region with JLL and then with CBRE for a few years. This is really how I started my career in that hospitality investment field, I would call it. I moved to Accor around 4 years ago, and since then I've been leading the feasibility studies for the company in the region, for Middle East, Africa, and Turkey. And the background I have in advisory was really helpful in understanding owner's mindset, how to approach an investment, and really, providing advice beyond just crunching the numbers.
Well, it's all about a hotel investment, hospitality investment at the event, what we do. Would love to hear your thoughts on what at the moment is hottest in that space in Middle East. What are the hottest destinations for hotel investments in your opinion?
And there's different ways to look at hotel investments. I think from a transactions perspective, so buying hotels that already exist and are operating, Dubai is one of the hottest destination, so to say. We've seen a lot of transactions in Dubai in the last few years. And I remember when I joined the region 10, 11 years ago, there were virtually no transactions, just one every year or something like that. In the last few years, we've seen trophy assets being transacted in Dubai. We've seen other types of assets as well. So being transacted, there's more diversity in that front. It's very interesting to see. So it's been really, Dubai is one of the hottest destinations for transactions. Now, if we look at the other part of investment, for us in Middle East, Africa, Turkey, it's development, building new hotels or renovating hotels. The entire region is relatively busy for this. Obviously, there are some markets that really have more spending power, investment power. And we're thinking of the UAE, of course. Turkey is a very big destination for investment for us, Egypt as well, and Saudi Arabia, obviously, which is one of the busiest markets that we cover in the region.
I mean, Dubai is quite unique, and UAE and overall lots of regions in GCC specifically quite unique in a way that government plays a huge role, and some of the frameworks support perhaps the drive overall. But how does it? Where does it? What sort of role does it play when it comes to investment and some of the frameworks that the government suggests? Supports the drive of the investment into the region?
Yeah, of course, that's a great question. The governments, they have a very key role in all countries, in all destinations, and in the region where we're located, in the GCC especially, but across the board, governments want to grow their tourism industry. So they are trying to have different types of initiatives. Some governments can spend, some cannot spend as much, but there's a lot of incentives that are provided to operators, but also to investors to develop specific parts or specific segments of an industry. We had the example a few years ago in Dubai when the government was really pushing to develop the mid-scale segment, and they implemented a scheme to lift fees, some of the municipality fees on mid-scale hotels. And this was a great added value, I would say, for investors. It was a great addition to their P&L and then to the returns of the hotel. It was for a fixed duration, but it worked very well for that duration for the different hotels. Generally speaking, these incentives from the government, they are here to make sound investments even better. They are not here to make a deal work. The fundamentals remain the same: a good location, good product, a skilled operator, a good brand. But these are plus that makes a good investment even better.
Amazing. Well, sounds like Dubai supporting some of the investors here in the region, and the growth in the region is incredible. And you would think that Dubai has peaked, but it's continuously growing. And just outside of just Dubai and overall GCC, the incredible growth has been outstanding. How do you see the trends has changed over the years when it comes to hospitality investments, and what sort of key factors are influencing that?
So, as I mentioned, one of the key trends we've seen in investment is the rise of transactions. And this is across the region, in Dubai especially, but we also see some of it in different countries. We've seen a lot of transactions happen in Africa in the last 5-6 years. And this is due to cross-border capital. So in Africa, a lot of the transactions were conducted by one of our partners, Casada, which is funded by Qatar and Accor. So the money coming from the GCC investing in Africa, that's a trend that we've seen in recent years. We've seen money coming from the GCC being invested in Egypt as well. Some of the examples, main one probably that everyone has in mind would be the Ras Al Hekma on the northern coast of Egypt. And that's one of the landmark investments that have been announced recently. So we see more transactions, we see more cross-border capital, and these are all trends that are really growing in the Middle East, in Africa, in Turkey. Now, when we look at it from an operator perspective, we just operate the hotels. We are not driving these transactions per se, but it still has an impact from us. An investor buying a hotel will have a slightly different approach from an investor who builds it. And we have at Accor more than 45 brands in the region. We have around 26 that are being operated. A lot of these brands and the brands that get a lot of traction recently would be the softer brands, collection brands, or these are one of the latest we launched is Handwritten Collection, which is a mid-scale soft brand, especially relevant for conversion projects. The brand standards are more flexible. It gives more choice to the owner in terms of design, and it's very useful for these transactions, because it's easier for an operator to get on board with a brand like this. From an owner's perspective, it gives a flexibility, but still with the engine power, if you will, from a big operator behind.
And I mean, talking about sort of operational side of things, and the models that are becoming a little bit more popular, lots of brands are moving to that franchise modeling, and franchising has been on the rise overall. How you see this impacting overall operational side of things, and how does it impact overall maybe guest experience at the end of the day as well?
That's a sign of maturation in the market in a sense. And we do see, you're right, a lot more requests for franchise contracts. At Accor, we're open to both management and franchise. They are both very viable business models. It will really depend on the location, the product, the brand, and the partner. We have strong relationships with owners who are managing hotels by themselves, and it works very well in a lot of locations. We also have very strong relationship with third-party operators who come on board to help manage hotel on behalf of owners when there's a franchise agreement with owners. So then there's different ways to approach the franchise model. Ultimately, from a guest perspective, a hotel being managed or franchised should not be relevant. It should not have an impact on the guest experience. If you stay at a Movenpick, regardless if it's managed or franchised, you should have the same experience and you should enjoy the same. But doing these franchise deals in the right way with third-party operators, with skilled owners, is really key for us in the region.
Talking about, I guess, another trend, the rise of technology and AI, overall just digitalization of hotel operation as well. So how do you think that's sort of impacting the overall operational efficiency, and whether this is improving guest experience or not? What's your thoughts on that?
It has to be improving guest experience. Hospitality is a service industry. That's really what sets us apart from different industries. Technology is very important. It's transforming the industry. We cannot deny this, and it's been doing it for several years now. It's not new. There's new technologies being rolled out, of course. The way we approach it is that technology should be an enabler for better service. Ideally, technology would help our staff, our colleagues in the hotels, deliver better service, free up time from the tasks that are a little bit less guest-focused, and have more time to dedicate to providing service to the guests, to attending to what they need, what they would want. And this is really how we approach it. Technology should be an enabler for great service. It's not here to cannibalize, I would say, on the industry.
Well, I've seen also mixed-use destinations becoming part of huge growth as well. I visited Egypt a couple of weeks ago. There's lots going on in that market overall. How the mixed-use destinations specifically become more attractive to hospitality investors, in your opinion, and how they become more attractive for developers and investors overall?
There's different ways to look at as an answer for this. From a customer perspective, what makes a mixed-use development interesting is that it's integrated. It's like walking in a neighborhood in Europe, for instance, and that's something that maybe we lack in some of the cities that we have in the Middle East, in Africa, cities that have grown fast in recent years. A mixed-use development brings some consistency to a specific area and some alignment in the components that are available. You can stay in a hotel, walk around the block to go to a restaurant. Your office might be there as well, a gym, retail. It's all very integrated. So it's successful from a customer perspective. Now, that means that you have more footfall in these developments, and footfall staying in these developments. From an investor's perspective, this is a great way to look at it. It means better cash flows, most likely, better returns, but also more resilient returns, diversified from different asset classes. And this is what owners want. They want good returns, but they want resilient returns as well. From an operator's perspective, we have a slightly different approach, but we see the benefits of mixed use in that it's integrated and very much aligned. We have several of our hotels, either existing or in the pipeline, that are located in mixed-use developments. If we think of Dubai, we have 6 hotels in Deira waterfront, all of them positioned in the economy or mid-scale segment with different brands. And there's a really good integration of different components. There's an alignment in positioning of all the components between the residential, the retail, F&B, and the hotels in that neighborhood. So it's a very well thought through development. There's a lot of upcoming mixed-use master plans as well. We've announced last year, for instance, Tribe and Tribe Living in King Salman Park in Saudi Arabia, in Riyadh. So these 2 hotels are at the heart of the redevelopment, I would say, of King Salman Park. And what we see from the renderings, from the work that's been done on the ground by the team, is the real harmony in terms of design, an alignment in the components. And we have confidence that what will be developed here will answer different needs for different types of customers, and they'll be able to have a sustainable experience within King Salman Park. Probably they would not even need to leave the area for anything.
Exciting. Well, I see why that would be an attractive type of the asset overall. Well, I mean, talking about a little bit of the hot destinations as well. I mentioned Egypt. What, in your experience, what do you see are the hottest destinations when it comes to hospitality investment from your side?
We work a lot in the Middle East. There's a lot of these hot destinations in the Middle East. I think if we try to avoid looking at specific countries or region, generally speaking, the industry is diversifying. We are a lot more reliant nowadays on leisure customers, on leisure travel than we used to be, let's say, 15, 20 years ago. What this means is that leisure customers are much more diverse than corporate travelers. They need then a diversity in offering from an entertainment perspective, but also from a hospitality perspective. We need to create new destinations to answer different needs for families, for instance, for single travelers and whatnot. So we need to answer this. We have 45 brands at Accor. We try to roll them out in specific locations to answer this diversity of needs. But we've seen recently a very big push for resorts. We have signed several resorts. We've announced recently some resorts in Ras Al Khaimah, in Egypt on the north coast in Ras Al Hekma. We're renovating some of our resorts. I think that's one of the biggest trends. We see new resorts in existing and new destinations. There's also a discussion that we are having very often in the region on secondary cities. Secondary cities also play a big role in the development of the industry. There are cities where a smaller population, of course, and where the hotel offering is usually more simple and less internationally branded. What we see in recent years is that investors in these secondary cities are much more institutional, professional, for lack of a better word. They want brands in these secondary cities, and that's one of the big trends that we're seeing. A lot of it in KSA. We have a partnership with AMSA Hospitality in Saudi Arabia. We're planning to roll out around 18 hotels, another franchise model, actually. Across secondary cities in Saudi, we have one already open, a Mercure in Khamis Bushaykh, but there are a lot more coming up. So this is one of the big trends as well. Hospitality is diversifying. The new hottest markets are much more varied than what we used to have in the past.
I guess we're going back to the support that government plays in encouraging some of those investments. How what sort of, I guess, government frameworks you see are going to really support the investment? And you gave some examples with Dubai and what they have done, but maybe some examples across the regions which were extremely supportive of the of driving that investment to the regions.
I touched very briefly on this previously. Different governments all have strategies, but they're slightly different because they don't all have the same spending power. An interesting way to look at government involvement in the growth of tourism is public-private partnerships. We've seen a few of these in the region. They usually target very large, I would say, tourism enabler project. The best example that I can think of would be the airport in Istanbul. As you probably know, there's a relatively new airport in Istanbul that opened a few years ago. It's now one of the busiest in the world. I think they attract around a bit more than 80 million passengers a year. So it's huge. It's actually a very nice airport. I've been there many times, and it's a smooth experience. It's very modern. It's easy to navigate. Now, this airport was developed through a public-private partnership. The government gave basically a concession to the airport operator, and that was the best way that the government in Turkey identified to develop a project that's very costly. So the public-private partnership, they enable governments to develop tourism-enabling assets without bearing the full cost by themselves. There's airports. So airports are a good example. There's been an announcement in Egypt as well a few months back of a public-private partnership between different airports, 11 airports in Egypt and the IFC, which is part of the World Bank, to upgrade these airports in Egypt. I think the first one that will be used or upgraded will be the Hurghada airport. Now, when you think of it from an operator perspective, it's a slightly different business to host guests in a hotel or to work in an airport or airline industry. Nevertheless, they are very connected, and the experience that our guests have through the airports impact the overall stay that they have. We want to make sure that the end-to-end experience for the guests staying at our hotels is the best from the time they leave their place to the time they arrive at the hotel and then leave back to go home. Improving the airports will really help with our drive as operators to premiumize, I would say, the industry. We have a lot more 5-star resorts, good quality resorts. We are renovating a Mövenpick hotel in Hurghada right now, which would be a really great product. Great airports will help deliver great experience for everyone.
Yeah, no, absolutely. And I guess totally right. As a traveler, you think about your overall experience starting from very much getting out of the airport and your entire journey, infrastructure, all of that. What about anything else that we've sort of not covered today that you'd like to go through overall? Anything exciting that may be happening or any announcements that you're planning? Anything in the pipeline you'd like to bring up to the attention of our listeners?
We've had some great announcement recently. Just last month, we announced a big signing for us in Saudi Arabia, for instance. We signed a portfolio deal with Bin Daud, a big owner in Saudi Arabia, for 3,300 keys across 4 hotels in 3 cities, different positioning. So we have a good dynamic at the moment. There's going to be more announcement at FHS, so I would invite everyone to come and attend the Accor announcements and the signing ceremonies as well. I think that's the best way to learn what we're about.
Wonderful. Thank you so much. Well, we thank you for the time spent with us. Fascinating things that we've covered, and I look forward to seeing you at the event at the end of the month, between 27th to 29th of October at Madinah Jumeirah. Thank you so much.
Thank you, Daria. See you there.
Yeah, thank you.
Thank you.